Hello, this is DTN lead analyst Todd Hultman with your fall market update. Currently, the markets are in quite an unusual position. Fundamentally, we have very tight supplies and good prices for harvest time, but at the same time, we have a lot of outside market concerns and financial investors are nervous. First, let's take a look at those fundamentals. USDA for corn is estimating ending stocks of 1.22 billion bushels in the new season ahead. That'll be the lowest in 10 years. For soybeans, they're looking for ending stocks of 200 million bushels. That's the lowest in 7 years. And in wheat, they're looking for 610 million bushels of ending wheat stocks. That'll be the lowest in 9 years. This is quite an unusual situation. As I say, those tight supplies are supportive for prices. At the same time, export competition around the world is limited. Corn production is limited by drought in Europe and the war in Ukraine. Soybean production has been limited by last year's drought in Brazil, while demand has remained strong. In the case of wheat, production's been also limited by drought in Europe and the war in Ukraine. The Russian threat continues to be an ongoing concern, is an unpredictable wild card for both the energy and the grain markets. This next chart shows the concerns that we're worried about, or at least much of the market is. As you can see, we've had rising interest rates through much of this year. The Federal Reserve has increased the federal funds rate target 5 times now, up to an upper rate of 3.25%. In the meantime, the stock market's fallen lower. Interest rates, the larger treasury rates have gone higher, and the US dollar index is trading at its highest level in 20 years. It's that high dollar that's of concern to commodity prices. As everybody knows, that makes exports more expensive. But at the same time, it's really unique in history. Previous dollar bull rallies have been accompanied by big grain surpluses, so that bearish case was obvious. But what happens when supplies are tight as they are now, that remains a little more uncertain. As I show you now on the prices of March corn and January soybeans, both of those prices made lows this summer in mid-July under the stress of a lot of speculative selling, with a lot of concerns at that time about rising interest rates ahead. Since mid-July, however, both corn and soybeans have rebounded back very nicely and are starting to show more respect for the tight supply situations they have. That's very unusual at harvest time. Typically, we're looking at seasonal lows this time of year. But as harvest is picking up, so far the corn and soybean prices are remaining well supported. Well, what's going to happen ahead? It's very tough to call, of course, but we'll be following it each day. I hope you stay up with our daily market comments and stay tuned to the news that we bring you here on DTN. This has been our fall market update. Thank you for joining us. Have a good evening.